Friends, today I would like to discuss about the update from USA regarding 25% additional tariff on countries that import oil from Venezuela. This is a punitive measure that would hit the Asian markets, including China and India, and among others. It will impact the US and Spain as well. This would be over and above the normal tariff that is currently being charged by the respective countries. And so the way it will be effective is that if suppose India last imported the crude from Venezuela in February 2025. So the additional 25% penalty tariff that is going to be levied by the US, it will be applied to all the goods that uh, India exports to the US. So though there won't be too much of an impact on US imports because India's overall export is very small compared to the imports that it does from China. The impact would be on Chinese goods. It will impact their overall exports, and it will cause an inflation in products in China. So uh, USA may start looking at alternative options of imports of similar goods that they used to import from China, and similarly, the scope for that tariff impact would be on India as well. So India does not stand a chance to benefit from the business that China is possibly going to lose. So, at the overall sequence for the immediate few months or 6 months, at least whatever imports that were coming from China would reduce into the US, and thereafter, if the supply chain is diverted to some other country, maybe some South American countries or Europe, which could possibly offer US similar kind of prices or cheaper prices than the current tariff that will be applicable to China. The supply chain would change, but it would be a temporary measure. It would also depend in the long run if China continues to buy its oil supply from Venezuela, and if India continues to do business with Venezuela. So the overall impact that India would see here is increase in the cost of fuel. If India diverts to buy fuel from other countries or crude oil imports or from other countries, then it is going to be more expensive. Currently, Venezuela has been offering India very good deals. So, some important information for you all to know. India's oil dependency on imports is 88%, which has increased by 3.5% in the first 7 months of FY 2024, which was until about early last year, and by 4.2% in October 2024 as compared to the previous year. So, increased oil dependency. For the first 9 months until December 2024, about 88%. Crude oil imports, we've covered this. India's primary sources of crude oil imports include Iraq, Saudi Arabia, Russia, United States, UAE. Impact on global events. Oil dynamics has been influenced by the factors like the Russia-Ukraine conflict, leading to increased reliance on uh, one second. Increased reliance on Russia for oil supplies and the subsequent shift towards West Asian suppliers. So, petroleum product imports. Imports of petroleum products also saw an increase driven by higher imports of LPG and lubricants and pet coke. Exports rise. Export of petroleum products increased significantly, driven by the higher overseas sales of pet coke fuel oil, motor spirit, and aviation turbine fuel (CBFS) domestic production. Despite increased imports, India's domestic oil production has declined, highlighting the growing reliance on imported crude oil to meet energy demands. So these are the concerns that we have. We'll show you some uh, some data. So here you can see here. This is mostly. Let me see if I can turn this around. Okay. Yeah, so if you can see now, share of various region in India's oil imports. Middle East share, this is I think going back to December 2024. Uh, can see Middle East, which is like the light blue, the one at the bottom. Then you see green, which is CIS, that is at the upper time. Then you see yellow, which is maybe third from the top, that is Latin America. Then Asia, dark blue, you can see March 2024, one of the bars has Asia there. Then EU is in orange, I think very significant. I can't really see any orange there. Then again lightish blue or grayish color, which is Africa. So right at the top, the number second or number third option that you can see, that is Africa. Then you have Canada, which again is in dark green, which in March 2024 was right at the top. Then in April 2024 it was number two, and in November again you can see one slight line there, which again represents Canada. Then red color is right at the top, which signifies USA, and white color suggests Russia. So I can't see any white color here. Possibly there may be no business or very less so insignificant amount of business that India has done with Russia. So this is an old overview, sometime based in 2019. Then again, this is an old figure based on the estimates of 2019-2020. Then this is the most current requirement, India's rising oil import dependency. So from 83% in 2018 to 85%, then 87%, then 2023 88%, and it's been more or less about 88% since the last 3 years. So this is a cause of concern from the Indian point of view. Based on this news that has come from USA, from Washington, it has impacted the rise of crude oil by 1.2%, and this is going to put more pressure on the oil market, with the supply chain being cut off. If the because of the tariff issues, countries like India and China stop buying crude oil from Venezuela, it will impact the overall world dynamics of oil, and the oil will start becoming more expensive as the supply would reduce from one of the suppliers. So Venezuela has been very hostile to United States and the freedoms which we impose through the trust social network. So what it suggests that 1 minute. Yeah. So Trump's announcement comes as the deportation pipeline between the United States and Venezuela was suspended last month, when he claimed Caracas had not lived up to the deal to quickly receive deported migrants. Venezuela subsequently said it would no longer accept the flights, but Caracas said it had reached an agreement with Washington to resume repatriations, after which nearly 200 Venezuela citizens were deported from the United States via Honduras. So how will it affect India? So the US president's action could hit India and China, where with exports, noting that Venezuela exports to both the countries and also to the US and and Spain. India imported about 191,600 barrels per day, which increased to 254,000 in one day. So this was for the period of January 2024 and almost 557,000 barrels per day for the month. So uh, it has been high overall 22 million barrels of oil, which made up 1.5% of India's total crude purchases. February, Venezuela exported 500,000 barrels of oils per day to China, and this figure was 240,000 barrels for the United States. So you can imagine if about 2-3% of the overall import is impacted, then the current Brent price of $73 per barrel would go up to about 78 to $80, and it would put more pressure over the long run. So price gains were capped. However, the U.S. oil producer Chevron has been given time until May 27 to wind down its operations and exports from Venezuela. Trump had initially given Chevron 30 days from March 4 to wind down the license. The two moves together taken elevate some pressure on Chevron, while putting more pressure on other consumers of Venezuelan oil, though it is uncertain how the Trump administration will enforce the tariff. So the Trump told reporters Monday that the 25% tariff would be on top of the existing rates. He has dubbed April to Liberation Day for the world's biggest economy, already promising reciprocal tariffs tailored to each trading partner in an effort to remedy practices that Washington deems unfair. So, what happened? India's tariff challenges are set to escalate following this announcement. Purchasing from Venezuela, Trump said. Yeah, this is all we've already read through impact. Yeah, so impact, we've been through this, how many barrels a day that India has imported. So the companies that will be affected by this would be ONGC, market cap of 3 lakh 14,000 crores. The share price closed at 241 per share on Tuesday, falling 1% from its previous close. ONGC Limited, India's state-owned oil exploration and production company, could face indirect consequences from the U.S. tariff policy. Although ONGC does not directly import Venezuela crude, its subsidiary ONGC Videsh holds stake in Venezuela oil fields. If Venezuela experiences reduced export revenues due to sanctions and tariff, these investments could face operational challenges. Furthermore, ONGC's domestic operations might be affected by the rising global crude oil prices, as supply constraint results from the tariff could drive up costs. So, not only would the price of crude oil increase, the increase of oil prices would also indirectly impact the overall importation cost. So, if there is tariff implied on uh, of the crude oil, those would also impact in a higher duty payments and also in excise duty, which the company would need to pay to the government. So, with Indian Oil Corporation fell by 2% from its previous close. Indian Oil Corporation Limited, India's largest public sector refined and fuel marketer, is likely to be significantly impacted by the 25% tariff on oil. Despite diversifying its crude sourcing, IOC still relies on affordable options like Venezuelan crude to manage costs. The tariff will raise the cost of oil, leading to higher refining expenses and potential supply chain disruptions. IOC could face challenging in meeting the competitive pricing while managing shrinking margins. company may have to seek alternative crude sources or renegotiate supply contracts. Reliance Industries, with a market cap of 17.44 lakh crore, the share price closed at 1,285 on Tuesday from its previous 1.3% short. Largest refiners may have significant challenges due to 25% tariff on Venezuela oil imports. Historically, Reliance has sourced crude from Venezuela to optimize refining margins, as oil is often priced lower than global benchmarks. The new tariff will raise the cost of importing this oil, potentially reducing profitability in its refining segment. Additionally, higher input costs may force Reliance to pass on the increased expenses to consumers, affecting domestic fuel supplies, prices, and demand. This could also hurt its petrochemical business, which relies on affordable crude oil derivatives for production. So, thank you guys for watching. This is all on the part of this. We'll try to cover another aspect of how the uh, tariff challenges are going to impact India in the long run, and also the impact of this on the Indian share market, which is currently uh, reviving from the new investments from the foreign institutional investors. So, thank you for watching. Please share this with your friends, family, and associates, whoever may benefit from this information. Thank you.